from London and a seasoned investor from London, seasoned India investor from London, Jeff Chowdhry of LGM. Jeff, what's your reading of the situation? In India itself, the markets have staged a very decent recovery, and there is a little bit of a recovery in the pound, not a little bit, actually a goodish bit of recovery in the pound as well. Should we understand that this market has priced it in? What's your view as an investor?
Yes. Well, first of all, apologies for my voice. It's been a very long night here in London, so I'm a little tired. But so I apologise in advance. But I think it's fair to say that obviously the initial reaction from the markets in terms of this very surprise vote was as absolutely as expected. A huge plunge in all of the risk assets. One of the things that we looked at, for example, was the yen, and you saw a big move in the yen, which was huge. I think even though David Cameron has now resigned, I think what will now happen is that people, both the central bankers and the politicians, will rally round. I think we've probably seen the lows now for the markets that we saw 3 or 4 hours ago, and I think from now we'll get stabilization, if not a bit of a rally from here.
Okay. Do you buy any of the India stocks, Jeff? You're such a long India watcher.
I think one of the things when you have a sort of a general risk on or risk off, everything, it's kind of what they say is the baby gets thrown out with the bathwater. And I think definitely in a situation where, where stocks get sold off, which really don't have any connection or linkage, it's always an opportunity to say, right, this stock, which I really like, is now down 5 to 10% from 2 days ago. It's a great buying opportunity. So selectively, for quality companies, yes, one should be buying, in my opinion, today.
Okay, Jeff, what about fund flows? Do you think there's a risk that, especially for emerging markets, given the kind of uncertainty that we have right now, we have to deal with a bit of an outflow and maybe much less inflows compared to, say, what we were seeing about 2 or 3 months back?
I think the most important thing to point out is that this is not 2008.
Okay.
This is an event which has obviously affected Britain and Europe, and economically and politically. This situation will pass. I mean, the politicians will stabilize the ship. And remember, it's 2 years before Britain comes out of Europe. And so, as a result of that, I think the main issue really is, certainly for looking for companies which are being hit very, very badly and picking them up. And I don't think emerging markets are going to be massively affected overall by this news or this event.
Okay, so you wouldn't see FII outflows from India?
No, I don't think so. Not on this particular news. I think the bigger issue, which nobody is talking about, is the fact that the U.S. economy seems to be hitting a soft spot again. And I think over the next month or so, one will be talking much more about the fact that the U.S. economy seems to have had a growth brick wall, as it were, rather than Europe and UK.
Okay, Jeff, thanks a lot for that.